Kochhar, hi, good afternoon, and thanks so much for your time. Give us your sense
Hi.
on where do you think the markets are headed and what could be the next lever of growth? Could it be a manufacturing-led growth that we could see, or now on the back of the GST cuts, could the growth entirely be consumption-driven?
Thanks a lot. Thanks a lot for having me on the call. I think the next leg of growth will in India be manufacturing led.
Okay.
We are already a very large services economy. We are a very large consumption economy as well. So next phase of growth, I think, will come with a bigger contribution from both investment and from manufacturing. The trigger for that, I think, will be the US trade deal, followed by the EU trade deal. But the US trade deal, of course, is more important for reasons that US will be a cleaner deal where we will get most likely some preferential treatment versus China. So that opens up the market better to India for trade versus any other market, I would say, right now at present.
Right. And Mr. Kochhar, on that note, where do you expect the US-India negotiations to head from here? Because we've seen the kind of news that we're getting between the US and China deal. Do you think India could be headed along the same path where our tariffs could come down to maybe just 10 or 15%?
See, I won't be able to handicap or comment
Sure.
on exactly what is going on. As investors, we tend to look at information and try to see whether the market is being over optimistic or less optimistic and try to sort of take probabilistic calls. Since July, when this trade treaty started getting into trouble, our stance has been that this will take longer than the market expects. And, at certain level, optimism that it will happen quickly or will happen in a form which is 15% tariff one should not assume. Yeah, I think there is substantial risk to those assumptions. Having said that, if the deal happens, it is very positive for India. The one small thing I will sort of mention is that till the time the deal does not happen, Indian capital markets are at risk. And let me elaborate that on that a little bit. Our external situation is precarious. Right now, it is being managed by the RBI with intervention in the foreign exchange markets. That can only happen for so long, and that can happen and be effective if the dollar is weak. If the dollar starts strengthening, then RBI's effectiveness in managing the currency will be lower, and we'll see some reaction there right away. I feel while the deal may happen, I think if it takes longer, the longer it takes, the markets are at risk.
Right. And Mr. Kochhar, amid a market like this, where there is a little bit of correction right now, there is not much certainty in terms of our trade deal going ahead. What are some sectors that you're positive on right now, and where are you practicing some caution?
So we are positive on banks, and that is one sector that we'd identified will do well if the trade deal gets delayed because it actually sort of has an impact on how quickly RBI can cut rates. And we thought that the market was being very pessimistic on margin outcomes in bank, which has actually turned out to be not the case. Yeah. So that is a call that we maintain. We also are, and by the way, there are good stock picks to be had across the banking space from private to public sector. Then automobiles, specifically two-wheelers, is a sector that we like. We like the defense sector too. There's some large government, players there who are monopolistic and have substantial runway for growth, which despite the run up still make a lot of sense. And there's valuation comfort. We like certain players in the healthcare sector, diagnostics, etc. So there's enough play there in the market, but I've highlighted the risk before as well.
And when you say banks, Mr. Kochhar, do you believe it's going to be private banks or PSUs? Because we've seen the kind of rally in PSUs. Are you expecting that to continue going ahead, or do you believe it's time for a little bit of a stop and the private banks will take over from here?
So PSU banks honestly have genuine value as a space, yeah. So there are certain sort of characteristics there which one should note. One is they're well capitalized, so they're growing pretty well. So growth is they're not losing market share on the asset side anymore. Secondly, they've in the recent past been especially risk averse. So the risk on the book is actually honestly lower than most private players even. They're not doing any unsecured retail credit, which generally tends to be more risky. So asset quality risk and corporate in India is exceptionally safe credit today with deleveraging having taken place over multiple years. So the PSU backs in, books, sorry, PSU bank books in general are exceptionally safe today. I would reckon even safer than the private sector. Growth is in line. They're not losing market share. Growth is sustainable. They do 15%, roughly 14, 15% ROE. So I think on a pure valuation basis, it's a very, very good sector to invest in. One, of course, can be selective based on, where one finds more valuation comfort. But PSU banks remain, despite the recent rally, a very, very core area of our investment recommendation. In private banks, similarly, we have both picks in the large and mid cap space. Mid caps, there's some very interesting stories that have emerged, and we are sort of including some regional banks, which we are sort of pitching to clients. And of course, on the large cap space, also we have a on the private bank space, we have some names that we are recommending. We are not allowed to sort of take sectors, stock specific calls on media, so I would refrain from giving actual ideas.
No worries, the sector specific call works too. And Mr. Kochhar, lastly, before we let you go, if you could give us a sense on any pockets in the market where you still think valuations are inflated and you would alarm some caution over there.
So, so some of these new age IPOs, honestly, there's a very, very interesting debate happening. Personally, I feel that one has to stretch your imagination a little bit to get to the value there. So, of course, in my opinion, one should be a little careful here. Then on the I think FMCG side, where the market is moving, I feel towards more in fact investment, less staples consumption. They're more saturated, but multiples are high. So there are few sectors that that way are looking overvalued, and one should be careful.
Mr. Kochhar, that sounds good. Thank you so much for your time today, and thanks for sharing your views with our viewers.